Hey Dominik, welcome to the Hashlabs podcast.
Hi, Aaron. Thanks for having me.
Can you introduce yourself for the listeners?
Yeah, I'm Dominik Wanzowitsch. I'm taking care of the business development side at Hashlabs, head of business development. So everything concerning other companies, relationship management, clients, it's usually on my side. Also the sales side of things. I'm not the guy for the sites itself to build them. I'm more the guy to fill them up, so to say.
So, what do you do in a normal workday for Hashlabs?
I am a lot of times talking to different people, be it hosting providers in different countries, Ethiopia, America, Canada. Otherwise, it's a lot of client talks, like making sure the machines run correctly, looking for new business opportunities, like new sites around the world. There's always something to look at. And a lot of client talking. I mean, when it comes to questions about the market, I'm always there to help, a little bit to calm people down in times like this, for example, to explain them, yeah, how the block reward works, or like how the transaction fees work, and how their cost of production also adjusts. But otherwise, it's mainly talking to either clients or to future clients or to potential partners.
So, how did you get started in Bitcoin mining? Like, what is your journey into Bitcoin and mining?
I was always into investing since I was already like a teenager. And then I heard about Bitcoin the first time, as most people, in 2017, on the first big push to 20,000, that everyone said it's the last time we pushed that high. And then in 2020, I fell down the rabbit hole like heavily. I started reading about it, never stopped reading about it since then. It's been what, 5, 6 years now. And I used to work as a carbon trader, before that in wealth management. And then I did some energy stuff, like I said, on the carbon trading side in Germany. And then I switched over to data centers and some AI, hardware procurement. And then I sat in the office and I thought to myself, look, like I'm into Bitcoin. It's what I enjoy doing. It's my one big hobby, if you want to call it that. So I wanted to make it my work. So then I found you guys, or I connected actually with Alan over LinkedIn, and it took a couple months. But then energy side and a data center side, it's quite the natural way to get into Bitcoin mining. So I was happy to join, and so far so good from what I hear at least.
Yeah, like your experiences from like previously in your career was a lot of them kind of like went into Bitcoin. Like you have experience as carbon trader, which is kind of funny because it's a little bit against Bitcoin's ethos, I would say, but but very funny. So let's look at your CV. You have a lot of interesting experiences. So first, I saw from university. After university, you started doing wealth management for quoting your LinkedIn profile, ultra high net worth individuals from Eastern Europe. That sounds
Yeah.
very, very interesting. And it sounds like you met a lot of interesting people doing that. So I don't know how much you can say these ultra high net worth individuals from Eastern Europe invest in Bitcoin or mining.
Yeah, it was quite an interesting time. Like Eastern Europe in this case was mainly Ukraine actually. Like we were working with, I don't know, I don't want to say numbers. It wasn't a huge amount of people, but it was a good portfolio of people that are in their 50s, 60s, like the usual oligarchs, so to say. And yeah, I was working in Zurich for them, taking care of bank accounts, of investments, etc. Bitcoin wasn't the biggest thing for them. We had some people that were into it, but to be honest, they were so rich, or they had such a high net worth, that they don't really need Bitcoin anymore. So they were more in the business of keeping their money and keeping their net worth, rather than like increasing it every year by 12%, 50%, whatever the goal is for each and every one. They were quite fine with money markets at 1 or 2%, and living off that. We did have some guys, there was 2 or 3 that were fiddling in crypto, especially in Bitcoin, some shitcoins too, and they were, at least in the time that I was there, performing quite well. But to be honest, at the time that I was there was the Ukraine war that started, so they had a lot of other issues. So Bitcoin and crypto wasn't their main priority. But hey, even then, like everything dipped, everyone was scared, and a month or two later, everything was going up again. So it's the usual FUD, it's the usual crackdown of the market for short-term times, and then 6 months later, it was back at the same level. So everyone who bought the dip, which most people did, because they understand, like in the long term, nothing really changes. So in the long term, everyone was buying the dip and being happy afterwards.
So did you actually pitch Bitcoin to any of these guys?
I pitched Bitcoin to my to the founder or the CEO of the company, but he wasn't the biggest fan either. It was actually the NFT craze, you know, with the Bored Apes and the crypto parts, etc. So they really didn't take it that seriously. Our market maker guy, he was in crypto and he enjoyed it and he was a Bitcoiner, or like he wasn't a Bitcoiner, but he held some. But the founding team, so to say, they were quite boomer with it. They said, look, which I understand, right? Like if you don't want to increase your net worth and if your goal is to keep the money that you have, then Bitcoin or crypto might not be the best. The best thing to do, of course, I think a portfolio like a 1 or 2% allocation, never a bad idea. But I do understand that if you want to pitch it to 60-year-old grandpas and grandmas, they are quite fine with understanding, yeah, money markets, FX markets, or the usual S&P 500s. That is a little bit more simpler for them.
Yeah, I guess that these Ukrainians that you managed the wealth for, they were more like from the maybe agriculture industry or
There were
energy industry,
production,
and
exactly.
yeah,
It was manufacturing a lot. It was a lot of agriculture, of course. It was a lot of manufacturing, and especially, like I said, it was the timing when I joined was a little bit. Yeah, the Ukrainians had the other priorities at that moment, be it safety or be it family rather than money. But we did have some, not everyone, but they didn't actively pitch crypto. They pitched, like as I say, safe haven assets as they call them, just to keep the money.
yeah, essentially just a place to park their all the cash that they're making from the business in Ukraine, just park it somewhere in Switzerland and hope
Exactly.
that it never goes away, essentially.
Exactly. Like I said,
So
most of them were quite old too. Like they didn't have 40 years to hodl or 25 years. They want to spend the money now, and that's why the volatility is not really what they're looking for.
so yeah, after that ultra high net worth individual oligarch thing, you moved over to carbon trading, which is also a very interesting industry. It's a little bit similar to what you do now, I guess, because it's also about communication, like you basically trading. But at the same time, as I said in the beginning, it's a little bit maybe against Bitcoin's ethos because, it's kind of like this Klaus Schwab thing. How was this carbon trading experience? And did you learn anything that you apply to Bitcoin or mining right now?
The carbon thing, I joined a little bit. I mean, I would say in the hype, like it was what 4 or 5 years ago already. So everyone was talking about carbon. Everyone was buying like carbon credits and etc. Like be it banks or manufacturers or everyone had to. I was working in the compliance markets. That means that people that I was talking to had to buy every year. That's a little bit different of the voluntary market where people can, if they want to, if they want to show that they're green or lie that they're green or whatever you want to call it. So I was talking to mainly to people that had it as a problem. So every year they had a certain budget that they needed to buy carbon with, and if they didn't, they would pay fines. So it was a little bit different to Bitcoin mining, as that's why I actually prefer what I'm doing right now, because right now I'm talking to people that want to mine. There I was talking to people that have to buy. And I was also working the German markets, which the Germans are very, they don't like to spend money if they don't really understand what they're spending it for. And then so talking to them, it was still super professional. Like it was like it was about a lot of money. So these things, they didn't come cheap. So it was a lot about the process and the communication side of things. But otherwise, learning how to speak with people was never really my issue. But like taking it or knowing when to be professional, when to be unprofessional or more unprofessional, that was the biggest takeaway from there. Just because, again, if you're talking to some buyers that are 30 or some business owners that are 55 and some older gentlemen from some manufacturing side, it's a little bit of different communication style, and that's what I see now too. I mean, we have clients that are 24, and we have clients that are in the late 50s. Like energy guys that were in the business for 30 years. Other than that, the job it was fun. Like it was a little bit hardcore. It was like the Wolf of Wall Street kind of things. A lot of calls a day, everyone in a suit, like a lot of screens, headset on, and a lot of hustle. But I actually enjoyed it. Even though it wasn't the most fun time, maybe I would do it again. Like if I could go back in time, just because I learned a lot. But otherwise, yeah, the biggest difference is this wanting to buy or needing to buy, which I'm much more prefer to talk to people that are. It's not an emotional sell at all, but still wanting is rather my preference than needing.
So you mentioned that you joined in the peak of the carbon markets. So does that mean it has gone down since then?
No, it means that like it was a big hype that everyone was buying carbon credits, especially on the voluntary side. It was like a trend that you want to be carbon neutral or carbon negative, or at least like offset your carbon by, with buying carbon credits from some forest in wherever, or some other energy projects in India or in Africa, or just like offset your carbon credits. In my case, what I was selling, I'm not sure what the price is doing. I'm guessing it's down too, but in my case, they already started doing it a couple years ago, like a longer time ago. So it's a typical compliance market. It's the whole of EU that needs to like every there's a certain industries that need to offset their carbon with their compliance. So they have certain tons of carbon they produce, certain like tens of thousands, hundreds of thousand tons. So they need to buy tens or hundreds of thousands of carbon credits to to stay compliant with the laws in the EU. I mean, as you know, like EU is going down slightly with carbon output, even though the world is still going up, and people are paying for it because they have to, not because they want to. At least that's what I'm seeing.
I see. Is there anything Bitcoin miners can utilize this carbon market somehow or participate in that market?
Actually, I was thinking about it too. I mean, we talked about it. For example, in Finland, I know that we are carbon negative even with our mining sites. The problem is, I think you need quite some scale to actually make it work and make it worth the time of the carbon traders. Just because otherwise, like they don't look at the couple thousand tons of carbon usually. It's like they're more interested in the hundreds of thousands or in the millions of tons. That's why I think in the future it might be a thing for energy companies to take into account, like having a mining farm and using that. But as a Bitcoin miner, if you're not like a marathon or like an Iron or whatever, I don't think it's worth the hassle right now, at least.
Yeah, I understand. Okay, so after the carbon trading experience, you moved over to trading chips, right? So that is also kind of within the energy field, or a bit also your journey is just going right into Bitcoin mining, you know? So tell us about that experience.
I joined it was a broker, so we were pretty much brokering chips. Like whenever someone needs something and the market doesn't have supply, for example, it was back in the day. You remember this Evergreen? I think it was called, the ship that got stuck in this one canal. That was a crazy time at the company, just because like the supply chains were broken, so people needed chips to produce like whatever cars, or it was anything electronic. And then people like us, because we had inventory, or because we knew we knew the suppliers and the inventory worldwide, then we were able to actually get you the items you need without you waiting on new ones. I started like mainly looking into AI data centers and calling them, but to be honest, they were quite connected themselves, so they didn't really need us per se, at least in this moment, like because there was no supply shortage in the time. But for example, now I read, I don't know if you saw that the memory cards were really getting really expensive right now, even like for house computers and stuff, because AI data centers are buying everything off. And that's where my company was doing quite well. Like every time someone had problems getting something, that's when our guys or our teams were quite fast into at least giving an offer, you know, because if you manufacture a car for 30,000 profit and you're missing a piece for $2, you might as well pay $10 for the piece, because at least your production keeps going, and you don't mind paying the $8. That's where these brokers are making their margin at the end of the day.
So you actually held, or your company held inventory.
We held some, but we knew the people that did hold inventory. Like it was it was, if not the biggest broker for electronic components. So be it in the US, be it in Asia, be it in Europe, we knew how to find things. Like our buyers were really impressive. So they were holding contacts with every single person that was worth it. So as long as there was really rarely a time where we couldn't give any price. Maybe we gave an expensive price, but I mean, that's the nature of the business, right? Like if there's no supply and a lot of demands, price goes up, and if you don't want to buy it, you don't buy it, but someone normally will.
So I guess that was a little bit before that AI craze started, right? So you quit that right before the AI bull market, right?
I mean, I quit that, yeah, more or less right before the AI bull market. But as I said, like normally these AI companies that are really spending millions and millions and tens of millions in capex, they have their contacts and they get the supply directly from the manufacturer. It's rare that they need brokers like us. But of course, I mean, I haven't been in the company since a while. I'm not sure how it's going there now. But even for memory cards and stuff, I'm sure there are some sweet deals to be made because not everyone's following the market as as companies that are like.
So, what do Bitcoin miners need to be aware of before they get into the AI market? And I'm not talking about like, because it's a huge field, you know, it's so many things you need to know, but specifically regarding procurement of this AI devices, what do they need to be aware of before entering into that market?
I mean, first of all, I think there's already quite some lead time on certain pieces and on certain chips. So don't expect like to want it to buy it today and receive it tomorrow. Like there might be if you don't want to pay a premium, there's a lot of other AI data centers that are waiting on chips or GPUs or even transformers, as you know. I mean, there's some transformers that have 2 years lead time, and otherwise. I think normally they know what they're doing because if you're spending 10 million bucks or 15 million bucks or 50 million bucks, usually the company you want to work with will work with you. Like as long as you're not a small player and you don't need like one or two little gadgets, you should be able to directly contact them. Of course, you can work with brokers if you need something, but otherwise, I think that at least the bigger ones and AI data centers, as you know, this is not $100,000 thing. It's like more in the millions. They just need to plan ahead. They need to understand that everything is going to take maybe a little longer time than they might expect.
So, what do you think in general about this whole transition from Bitcoin mining to AI that we're seeing in America and Nordics and different places?
I actually think that it's a plus for Bitcoin at the end of the day because like if you have electricity and you have a buyer at 6 cents and a buyer at 8 cents, why would you not sell it at eight, right? And AI data centers right now at least can pay more than Bitcoin miners. But at the end of the day, as a Bitcoin miner, what we are good at, or what miners are good at in general, is finding cheap electricity that nobody wants, and we will take it for as long as the electricity stays cheap. And the moment it's too expensive, and you have some other off taker, be it in Ethiopia with the hydro dam, or in America with the AI centers, then people switch, and the miners look for a new location. Another day, that's why everyone that's saying like Bitcoin wastes energy, I think it's such a stupid thing to say, just because Bitcoin doesn't waste energy if we are the biggest buyer, like in this case, wherever we go, we are the buyer of energy. The energy is there either way. We just use it. We don't waste it. And the moment we don't see it or it doesn't make sense in the calculations and someone else can pay you more, that's fine. You know, that's the market. That's why I think like all the US, I don't know. I know the hash rate went up or went down slightly because of the snowstorm already, but even in general, like a lot of the miners are transitioning into AI just because I guess it's more like they got their power purchase agreements like 3 years ago. AI came and now they can sell and flip their power for millions of dollars. So I would be surprised if I wouldn't do it myself, so to say.
So, what are the differences and similarities, let's say, between the AI chips or the devices and the Bitcoin mining devices?
I'm not 100% sure what the AI chips like look like. I know that they're crazy expensive. Like there's Nvidia GPUs that are costing like 200,000 bucks per piece. Like it's the H100s and H200s they're called. The only thing I know like better is the Bitcoin side of things, whereas the chip, like it used to be like GPU mining, right? Where everyone was using those Nvidia GPUs or whatever. Now it's ASIC chips. Like these chips they can only do one thing. That's the Bitcoin equation. And that's why they're as efficient as possible. I know that the guys like when I left, I told my company to look into ASIC chips, but I also think like as you know, there's just a couple suppliers of them, and the manufacturers are also the same. So I don't think they need the brokerage either. Otherwise, it's they're just way more expensive because they need to do way more. Like the AI chips are smarter than the ASIC chips, just because the ASIC chips they do one calc and that's what they're running the whole day. So it's a little bit more simpler on that end.
Yeah, maybe soon we will see AI ASICs, you know, just like what happened with Bitcoin mining. So, yeah, what is the most important learnings from you in general from the trading of chips that you now apply in Bitcoin mining?
Oh, I think it's a lot of demand and supply. When I joined Hashlabs, the Bitcoin price was what around the same as now, actually, more or less. But the machine prices were way higher. Like in terms of dollars per terahash, it was 40% higher, maybe 30% higher than now, even though the price is the same. So I think it's a lot about demand and supply that I learned. Of course, it's nice to learn like what a semiconductor is and how these things work. But at the end of the day, it's more about I realized that if you want to buy something, you should maybe rather buy it sooner than later because the market it switches so fast that it can go both ways. Prices go up, prices go down, but waiting on prices to do what you were expecting them to do was usually not the best strategy. Neither in the semiconductor space nor now, because I had people back in the day like looking for memories, and they said maybe I'll buy next year. And I had people in, for example, with the carbon trading, the people that had electricity saved before the Ukraine war and PPAs, they were doing fine. But the people that didn't have PPAs and were buying electricity year for year, they were really, really, really struggling just because the energy prices spiked and they didn't have any long term fixed energy costs. So it's the same for miners, I guess. It's the same for electronic components and brokers. It's you need to like if the calculation makes sense today, then why not take it today? Why gamble on better times if it makes sense now?
Yeah, it reminds me of like a couple of years ago when the interest rate was like 0%. I basically told everyone I knew who had a big mortgage, lock the rate now, and no one did it. And now they can regret that. So that leads us into an interesting conversation. What do you think in general about the market right now for mining?
I think the market right now for mining, at least, it's interesting, right? Like all the ones that are expensive and all the places that used to be the cool places are kind of dying just because it's either they're becoming unprofitable at 8 cents or above, like in the US, that nobody can pretty much mine there right now because it's underwater. Depends on the unit, of course. All the places like Ethiopia or UAE is facing their own struggles, be it with government intervention, with taxing, with downtime issues. But in general, the market in terms of buying right now, it's the same price as 1.5 years ago. And the chips or the machines and the electricity is 10, 20, 25% cheaper. Of course, buying when the price is down is always harder than buying when the price is up. But as an example, I mean, when I started with Hashlabs, I sold the M63S model at over $7,000 and 7.2 dollar cents. Now I'm selling the M63S Plus model at 5.7 to $6,000 and 6.5 dollar cents. Price didn't change, hash rate went down, but the things and like the equipment itself and the electricity is cheaper to fix now. And during the time when Bitcoin was 120K and 110K, or like 1.5 years ago, people were running through our door. Every site was sold out fairly quickly. And now, I mean, we're still selling, but it's way less noise on the street. And I already cannot wait for Bitcoin to push upwards. And then everyone will ask me for today's prices, where I will be like, look, guys, like today's prices is not tomorrow's price. So let's see how it goes. But I think it's the same as buying Bitcoin spot. Like you need to DCA. I mean, I know that you wrote the article, like Bitcoin mining is not DCA per se, but buying Bitcoin miners on the way down would be seen as a DCA just because you're getting the same machine for less expensive, for less expensive electricity. If you believe in Bitcoin miners, that's what I also like about the business. Like the people that I'm talking to, they are believers. Like they know that in 5 years, price should be more expensive than today. Even though it's painful to buy now, maybe for the first couple months, I think in 3 or 4 years, this is going to be a very good spot to add some miners or add some Bitcoin just spot.
Yeah. So I know that you also pay a lot of attention to like macroeconomic situation, which I don't really do. So it would be interesting to know like, what is driving down the Bitcoin price.
I mean, right now I think it's mainly FUD. It's a lot of Iran topics. The Nasdaq and stuff are dropping because of the AI bubble popping. But I think just yesterday, I think it was Amazon or Google that said we will invest like $130 billion in the AI data centers. So I don't think it's gonna pop. Another thing, I know a lot of OGs are selling, like a lot of old Bitcoin holders. That's fair enough, like if I would make a couple $1 billion in Bitcoin profits in 10 years, at some point I might sell. I might have sold now too, even though me personally, I don't see the point of it, but I think there's a lot of leverage trading too. I mean, all these degens with 20x leverage, like the moment the price goes down, they 50x it, and then it's just 2%, to get them liquidated. And market makers, they take liquidity in both sides. I think actually I checked before the liquidation heat map. It's pretty much the longs are dead. There's a lot of there's like billions of dollars liquidated if we go to 100K, but I don't see that much movement downwards anymore. There's I think if it drops 10% around 59,000, it's the average cost of production for miners, so like one of the cheaper ones, and it's a 200 moving average that rarely gets broken. And I think there's also some kind of Yeah, the usual cost of production for miners worldwide, it also usually doesn't get broken just because it still stays on a slope upwards. So I don't know. Like I'm to be honest, that's the good thing as a miner too. I have an electricity bill every month that I pay in fiat, and that's why if it goes down, I'm happy. If it goes up, I'm happy. I'm happy to stack more Bitcoin because long term, everything is going to zero against it, and stacking at these prices in, let's say, even in 5 years, in 10 years, in 15 years will be like a joke. It's 3 years ago we were at 15K and people are crying that we're in 70 or $80,000. It's like gotta zoom out on the screen and not look at daily charts and don't leverage 10x and like don't gamble. Like if you know what you're holding, you don't need to gamble.
Yeah, you're a true believer in Bitcoin, and like now I think we passed the high of 2021, right? Like we went down
Yeah, we're at
below that.
67,000 now, more or less.
Yeah,
I'm not sure.
so
I'm not sure if in inflation adjusted, like because we have more Bitcoin now. I'm not sure what the market cap's looking like, but we're around the same. We're around.
yeah, so historically, I think that has been kind of the bottom in the bear markets, right? The previous high was always the next low, right?
Yeah, it was in 2021. Was it the same? Right, it went from 69 to 15 or 16 or 18, which was the 2017 highs. To be honest, I used to, at least the last month, I always said I don't really believe in the 4 year cycle, and I still don't. I think this is a lot of fad and market maker stuff, just because I don't think there's a 4 year cycle anymore. There's companies buying, there's countries mining. I think this thing is overdue for, like, this. The spring is loaded both directions. But what I always say is the typical stuff that Sailor says: is volatility is a feature. It's not a bug. Like it goes both ways. And if you want to have a lot of price appreciation of like 50%, 40% a year, at some point it needs to go down. And I cannot wait for the time when Bitcoin drops from 500K to 300K minus 40%, and everyone will be crying. Like that will never stop. That's why if you study Bitcoin and you know what you're holding, you're peaceful, and that's what I am. I don't really I check price a lot, just for like developments in the world, but I don't really care about price. I'm happy both ways.
Yeah, that's very good. So, what do you believe in general are the biggest reasons for people to mine Bitcoin?
I have like a framework of four main reasons. First one that is quite interesting. That is actually I thought that it would be less of a big thing for people, but it is. It's a KYC free Bitcoin, KYC free in like this, because there's certain pools where you don't need to get a name in, you don't need to get an address, you don't need to get an email, and the Bitcoin directly gets sent to your let's say, for example, hardware wallet, like a cold wallet. So theoretically, the Bitcoin is fresh and it's new, and there's no one really knows who the wallet belongs to. Of course, if they really want to find out and spend the resources, they will find everyone, I think. But so KYC free new Bitcoin is one thing. The next thing, it's like a leverage bet, right? Like if the Bitcoin price goes up fast and strong, and you start DCAing rather than mining, then you're losing out on potential profits, because the cost of production, even though it's slightly volatile depending on hash rate and etc., it stays more stable than the Bitcoin price, because there's no top for Bitcoin price. But for hash rate, at some point, you need miners, you need manufacturers, and you need sites. So there is a limit in the short term for how much new hash rate can go up, whereas the price can do what it wants. And then, of course, the calculations when Bitcoin was 124K and you had an ROI of 2 years is prettier than today. But yeah, that's why also the prices drop for the machines. I mean, it's always, it changes quite fast. I mean, 1.5 years that I joined you guys, it's been, the ROI calculations were changing by the week, to be honest. So I don't really see a problem with that. The next thing, so we have the leverage bets, we have the KYC free. The third, one of the bigger things that people don't think about at all, is the transaction fees. I mean, as we always say, there's no instrument in the world on financial markets that you can bet on transaction fees going up. And again, I'm referring to your article. It's what, 2012 lows with transaction fees, which is absolutely ridiculous. And only miners get it. I mean, there's no other way to get it.
2010 lows.
2010 lows. Like it
The
cannot get
first
worse.
year of existence of
That's
Bitcoin.
crazy. I mean, I know it averages, what was it, 0.5 usually, like over the last 15 years. So what was it? Or 0.05?
So let's use since 2020, basically. I think that's more representative than going too far back.
Yeah.
So since 2020, the average fee per block has been 0.35 Bitcoin
And
And
now
right now
it's
it's like nothing. I paid more to do a Lightning transaction than do an on-chain transaction.
yeah, it's
Because the
crazy.
Lightning wallet wanted a big fee, which I wouldn't have to pay on chain. By the way, that's why I always, when I do the ROI calculations in Bitcoin mining, I always input 0.35 Bitcoin per block, because I assume that that's how it's going to average out over the long term. It could even get higher over time, but like it's naive to think that it like zero transaction fees,
It's
because they're very volatile. So sometimes you will get extremely high fees, but most of the time nothing. So you have to account for these periods. The fees are very, very high, these few blocks in a
I
year.
I think it's what like that doesn't even matter the normies. Even like Bitcoiners, they under appreciate how small the block size is of Bitcoin. I mean, in the halving blocks, when everyone to be honest, I don't know why everyone wants to be in the halving block. That's like a thing for themselves. But the halving block had a 44 Bitcoin transaction fee, 44 Bitcoin, and like there's not that much space on the block. That's why Lightning and stuff is a good thing because like otherwise Bitcoin is too expensive to become like money that you use like on the normal blockchain. But yeah, it can absolutely go both ways. I think a little bit of the problem is right now, like all the paper Bitcoin, be it like exchanges or like ETFs and stuff. But in the long term, nothing changes. I mean, at some point, people will have to use it. There's 7,000 stores in America that take it. There's Switzerland and Lugano, like supermarkets take it. There's like I'm in Ozonta right now, the whole island or the whole beach here where it runs on Bitcoin. So there's people using it, and there's new economies or like new circular economies as they call them coming up. I was just at the conference in San Salvador, and there's economies in Paraguay, in Chile, in Uruguay, in Honduras. Like people are building, people are using because yeah, we have the best shitcoins with dollars and euros, and we're struggling. Then imagine what Argentinians and Chileans and people that use even worse shitcoins are feeling if their money devaluates itself every 50% every couple of years. Like they're looking for solutions.
Yeah, so I still haven't really found out how big fees will be in the long term. Let's say, assuming the whole global financial system moved over to Bitcoin somehow, and Bitcoin became like a global settlement layer. Of course, people going to use mostly BlackRock BTC and Sailor BTC, etc., for doing these daily transactions. Like, I really believe like BlackRock will be like the bank of the future,
Yeah.
basically. Same with Michael Saylor. People will trade this Saylor Bitcoin around, accept them as payment. So it's very difficult to say what will be the actual fees per block under such a system. But of course, we can do such an estimation in a future article. So subscribe to our newsletter, and maybe we'll write that article for you.
Leverage KYC free mining gives you upside to transaction fees. And at the end of the day, I mean, that's why everyone does mine. In the normal world where everything goes as it went the last 4, 5, 6 years and you can pay your electricity in fiat, your Bitcoin miner will result in more Satoshis than if you just buy spot. I mean, otherwise people wouldn't really mine Bitcoin, right? Like the cost of production is usually lower than the price. I mean, right now it's a little bit weird times, but that's how it goes. So at the end of the day, you're mining to get more sats than you had before. Especially the last month showed me that you really, as a miner, that's why I normally tell people to just buy spot and don't mine. As a miner, you need to be able to go through these bad times and spend your electricity in fiat. Because if you need to sell right now the Bitcoin to cover your electricity costs, it's gonna hurt you in the long run, and that's not a given anymore that you come out with more sats. But otherwise, yeah, more sats later than sats today. That's what people mine because it is cheaper to mine than to buy, at least on paper.
Yeah. And to achieve that, you have to be a bit timing the market a bit correctly. We did some analysis on that in a previous article, basically comparing buying Bitcoin, like all in Bitcoin buy, all in miner buy, DCA Bitcoin, and DCA mining. And we found that under like a normal hosting rate, etc., the all in on mining won. It produced significantly higher returns than all others, assuming you invested, I think it was from 2020. But that was a very favorable market condition for mining because the hash rate was artificially suppressed due to China banning mining. But yeah, so you have to be a bit lucky with the market, or at least maybe said differently, you have to invest in the right time. If you invest in the wrong time in mining, it probably will yield less Bitcoin than
I
just buying Bitcoin, but it depends really on, of course, on the hosting rate and the uptime,
I
everything.
think it's exactly. I think the timing thing is of course maybe it's a little bit of luck, right? Like knowing what the Bitcoin price does in 2 months, nobody knows. What I think is the most important thing is knowing where you mine. There's a lot of countries and a lot of cool places to mine till they're not the cool place anymore. Like I mean, with Alan, right? It was Kazakhstan used to be the best place. People came with millions of dollars. The government started taxing every single cent and every transaction. People like mining died there. Ethiopia used to be a couple years ago, right? The next big place to mine. People come spend millions of dollars. It's still not up to par of what they promised. Paraguay, same thing. Argentina, same thing. That's why I think the most important is that you go mine somewhere with stability and knowing what happens at least, or knowing that you cannot get. I don't want to use the F word, but you cannot get wrecked, in the next years. That's why I mean it's not even self-selling, but like we have the Finland project, 5-year contracts where we're part of the energy infrastructure. They cannot turn us off. The poor Finnish people will have not have warm water, or you go to countries like America and you try to find a good rate. Of course, the electricity price is important, but you can have 5 cents or 4 cents or 3 cents. If you run 30% of the time or 50% of the time, your cost is already higher than anywhere else in the world just because you will never get your money out. That's why I think the location is the location is the decision people should really take care of, and the timing is hard. Like the time in the market beats timing in the market, right? Of course, there's a little bit of luck, but the location like choosing the location, that's not luck based. That's research based, and people always look at electricity rates and then they say that's better. That's not the case. I mean, you guys know it even longer and better than me, but from what I see, even UAE right now is running into problems. I mean, we just heard a couple days ago there's always something brewing, and as a miner you want to run 24/7, 99 point whatever percent of the time, and just stack in peace and have no risk of getting screwed over, which is the most important part.
Yeah, you're essentially taking two type of risk. You're taking country risk, and then you're taking also the operator risk. So you talked about a lot about the first one. You have to, or you don't have to, but it's an advantage to mine in a politically stable country. For example, let's use Norway as an example. I know people think it's like a dangerous country to mine in because they see headlines that Norwegian government hate mining. But in reality, it's one of the few countries where you have been able to mine for like 5, 6, 7, 8 years, basically since the inception of mining, until now without any big problems. There was some tax increase, but it was still a competitive location after that. Same with America. It's also been a good place to mine. Of course, some hiccups with the import tariffs here and there and stuff like that. But yeah, there's not many of these places in the world. I can probably count them on all these countries on one hand. And then the operator risk is, I would say, even more important than the country, because a strong operator could navigate also a difficult country. And it also means that, let's say you're mining in America, yeah, it's a very safe country, but that does not guarantee that your operation will run stable if it's some retard running your operation, right? So
I mean, look,
yeah, I just want to point that out.
how many bad stories have only you heard the last couple of years? I mean, I have clients coming to me that have lost millions got stolen, machines are not there, machines are this, machines are that. It's a trust game, right? Bitcoin mining is the biggest trust game I've ever seen. Even though in Bitcoin we say don't trust, verify, but with mining you're not gonna fly to Ethiopia and look at your machines every week. You're not gonna get a 24/7 live stream of your units. If you wanna mine, then you need to be really careful like who you do it with, because there's a lot of people that look at every dollar and try to get every dollar out of people and then try to not support them anymore. And I'm actually surprised how many it is, because I mean, of course, there's always bad fish in the sea, and that's with every business, but with mining especially, it's been a it's been interesting to see how much trust is in these things. And that's why I mean us ourselves are doing the same thing, right? We're trying to be more transparent than most and trying to be not to look at every dollar and make every little margin that we can, and rather like be a long-term trusting partner, because otherwise this thing is not working. Like a miner should run for 4 or 5 years. Like if after a year the support goes down and the people are not responding to you, then your ROI is infinity, because the machines are not running, and in so many countries. I'm really surprised that it's such unstable. Like whenever it sounds cheap, it's such unstable stories after a year. So, but I mean, it's also part of the mining game because people are making quite some margins on it.
Yeah, so can you be a bit concrete about these problems and the risks you talk about in mining and hosting? Like, what specifically have you heard, like horror stories? Like, you don't have to mention any names, of course, but like, what can you tell us a little bit about some
Yeah.
stories
I
from?
mean, there's stories of hundreds of miners being stolen in certain, let's say, Latin American countries, just because the safety is not as it should be. There's stories now of, like, again, without mentioning the location, maybe, but people promising they have contacts with the government and everything will be fine and everything will be fine and everything will be fine. Till then, your uptime is 20% or 30%, and the government actually says no. Like, we didn't have any deals with them in the long term. We're not fine with what they're doing. It's okay. Actually, I can even mention the location. It's the UAE, right, where everyone is. There's certain electricity rules that if you use it for a certain thing, you get subsidized electricity prices, and people are acting like they're using something, and then they're mining with this. It works till it doesn't, and these things are so, I don't know. Like, I mean, fair enough. People are getting into it because they're not doing too much research, and a lot of getting promised, and everything sounds fine because you're also working with bigger customers and bigger companies that are spending millions on it. Making sure there's a way out or there's another option at least is becoming more and more real to me. Just because at least other than Finland and even the US or Norway, for example, I've heard always mixed stories. I mean, of course, there's good mining companies in Latin America too, and in the UAE for sure too, and in Africa too, but it's a lot of promises that are hard to be kept. And what are you going to do against it? Like, your miners are the ass of the world. They're not next to you, and shipping them out and getting in contact with people is harder than it seems like, at least.
Yeah, so maybe the most important thing miners can do is to have a plan B and know that they actually can get the machines out in case they need it. Because, if you have a bad hosting provider or get into some trouble in a country, at least if you can move the machines out, you will kind of recover your investment. You will most likely not lose very much money. The worst case scenario is that your machines get stolen or burned down or something like that, which
Again,
has happened
I also have
to
to
some
say,
people.
like, to take hosting providers into like a little bit of the defense. Like, of course, if they're lying, they're pieces of shit and they're liars. But often enough, the governments are also saying we will do this, and then they do it till they don't. So it's not always the hosting provider's fault, because if we get promised something and we promise it to the next one because we got government officials saying it, and then it's not the case, that's the nature of the
Yeah.
business, because it's still niche, right? It's still a small thing.
Basically the government is a hosting provider too,
Pretty much,
for
yeah, yeah.
for everyone,
I mean,
and
they're
they
making the
also
most money, right? They're
make,
making, yeah.
yeah, and they have their incentives. It's also, governments are very inefficient, even if they say that, if a country like, let's say, Ethiopia or Kazakhstan, we all know it's not a secret that these are, I don't know what I can say, unstable countries. They have
Sketchy, I
like,
guess.
they're very stable until they're not stable anymore. And they can say, they have powerful governments that can say, oh, now we support this industry. But then what if that government gets replaced? That's happened in Kazakhstan. And that's why partly why the industry failed in Kazakhstan. They can also suddenly just stop supporting it. And we also have to remember in these countries, there's so many people within the government. Not all of them want to think about best interest of some foreign Bitcoin mining company.
Because they made the
We
money
are a
already, right?
very, yeah, and also people need to remember that Bitcoin mining is such a niche and new industry, kind of, I would say, almost a shady industry from the government's perspective. It's not so respected industry as traditional industries. So the government, I think in certain countries, they feel more free to kind of bully the miners more relative to, like, let's say, oil producers or agriculture companies or traditional mining companies. Let's say that the government of some African country, they bully mining industry, try to extract as much money as possible in the short term. Yeah, it would be bad for their international reputation for attracting capital into the country. But I think a lot of these investors from traditional sectors, they will kind of close their eyes a bit to it. They will think, oh, it's just Bitcoin mining. It's like different, it's
Yep.
shady industry. It's, you know.
That's
So
why I think like I said, what I always say is, as long as people would start studying Bitcoin, there wouldn't be this many issues. People would be calmer with the price action. People would understand what they're doing, because a lot of times this seems like everyone wants to make money, but not everyone wants to make Bitcoin, because Bitcoin is the goal, right? And then it's not the dollar. It's not like buying a Lamborghini. It's being free, having Bitcoin, and being your own sovereign bank, so to say, without like needing everyone else. Like, it's been. I'm still surprised how small it is at the end of the day. I'm mining either way, but even Bitcoin in general. That's why, yeah, I always say study it, and the rest will follow. Even like 100 hours, it should not be too much to ask for.
So, Dominik, any closing thoughts before I let you go?
Nothing big. I mean, just be calm. Go touch some grass. Don't look at the daily charts. Bitcoin is not the first time it's doing this. People always say, "Oh, if I would have bought in 2012, they would have sold. They would have not held it today." Like it's the same thing. 3 years ago, it was 18,000, and people were screaming for lower. Today, it's 67,000. People are screaming for lower. It's gonna be 300,000 someday, and people are gonna scream for lower. So it never changes. It's Bitcoin. Bitcoin does what Bitcoin does. That's it.
Yeah, it's very refreshing to hear Dominik's optimism. He always has a long-term view on the market, and his strategy is just get more Bitcoin. It's very nice. So where can people find you?
Either on LinkedIn, Dominik Wanzowitsch. On Twitter, I go by YapaYapaBTC. That's an old handle I had. And then otherwise, just email me at Dominik@Hashlabs.io, info Hashlabs. If you want to find me, it's not that hard. I'm also on Telegram, but yeah, just text me wherever. It should be possible.
Okay. Thank you very much for joining the podcast, Dominik. It was a
Thank you.
pleasure.
Thank you. Thank you.
Okay. Thank you to all the listeners, and see you in the next episode. Bye bye.